So you're looking to build wealth with international stocks. That's what I'm going to show you in this video. Hi, my name is Yolanda and welcome to my platform, Financially Fabulous Females. On this platform, I give you easy, actionable tips, content, and strategies that you can use to manage your money well and to build generational wealth. If you're new here, please hit the subscribe button so you never miss an episode when it does come out, and also hit the like button. That will help me reach more folks just like you that can learn a little bit more about finance from a South African perspective. So we're talking about international stocks today, and I'm going to show you how you can start investing in the big international companies and make some nice profits as well. So there's two ways in which you can invest in overseas shares or overseas companies. One, directly, that is via broker, so not so direct, and two, via index funds. Let's look at the direct way in which you can invest in the stock market. Firstly, although it's direct, you're going to have to do it via a broker. Okay, that can be your bank, it can be an easy investment platform, or you can go directly to the overseas market in whichever stock exchange you're looking to invest in. And in South Africa, you are allowed to take R1 million offshore. If you're exceeding that R1 million, you are capped at 10 million, but you're going to have to get the permission of the South African Reserve Bank. So before you even go that far, let's consider all of the options of investing offshore. Firstly, you could be investing in international stock markets. Maybe you're looking for the next Tesla that's really going to spike and give you some really good profits. But in order to do that, you got to have some skill. You got to do some analysis, fundamental analysis, technical analysis, to try to identify what's the next best thing. And in order to start using the skill, you need time to watch the markets, watch the environment, watch the sector, what's happening in the world that's going to impact the stock that's probably going to make it big. Then you got to have the appetite for this kind of risk. Remember, when you're investing in the stock market, you're investing in shares, shareholdings in company, and we call that an equity investment. And you got to watch my video on asset classes, and you can watch that over here. And in there, I will tell you all about the various asset classes and the risks that are involved. So when it comes to investing in equities, this is a very high risk investment. You must be willing to stomach the ups and downs of the equity market if you want to be investing in shares locally or internationally. It's also great for a quick flip. If you want to be day trading and making quick buys and sells when it comes to shares, then this is a great option of directly investing in the stock market. And there is a risk. What if you pick the next Steinhoff? What if you pick the next company that's been cooking its books just to have that inflated rate and a whole bunch of corruption going on? What if you pick the next Steinhoff? So your next option is index investments. So how an index investment works is you are investing in a basket of shares, and that basically takes away the risks, and it takes away all of the skill and the time that it's needed to identify the next big share. So index investing is less risky. And with the less risk, it's not as volatile as a direct share market, and the rewards might not be as exciting as you would see here. The loss won't be as bad as well as compared to the less risky index investment. So what is in this index fund? Firstly, it's basically a group of shares that's pooled together, either by sector, by industry, that's basically pooled together in which investors like us can invest in. So those are your two options of investing in shares, directly via a broker or indirectly via an index fund. So let's break it up. What is inside an index fund and how exactly does it work? So how does an index fund work? For example, let's take the popular index FANG. And I know when you think FANG, you're thinking Draculas with the big fangs, but this is not the case. So in the FANG investment, there's a group of companies. The FANG fund is tracking these companies. It's Facebook, Apple, Amazon, Netflix, and Google. Not exactly Google, more Google's parent company, Alphabet. So that's basically what's in this fund. So instead of you buying individual shares and taking on all the risk that's in each of these funds, you just invest one time into FANG, which is a lot easier for you to manage as a newbie or a novice investor. So how do you go about investing in international shares? One, there's two ways. Firstly, there's the active way, and then there's the passive way. So active means you are buying by yourself. So you go out, you do all the research, you find your exact platform, you manage the fees, and you do everything by yourself. So if you want to invest in tech companies, you will go and do all of the analysis to go and identify whichever is performing, what are these tech companies all about. It's all on you. You actively investing and going heads on into the investment of these international shares. So here's the thing, you are doing all of the work. You're doing all of the analysis. So you need the time and the skill to perform this analysis. You're doing the buying, you're doing the selling of these shares. And then there's the passive way of investing in international shares, and that's basically with the index fund. So one of the beauties about doing it, the index fund or the passive way, is one fee. Because you're only investing in one fund, you only have one fee to pay. And because there's very little buying or selling happening, you're actually tracking an index that has already been created. For example, the S&P 500. The S&P 500 tracks the top 500 companies in the United States Stock Exchange. So instead of you going and buying shares in all 500 of these companies, you invest into a fund that's tracking the S&P 500. So it's only one payment that goes through, only one set of fees that are being paid, and you're letting the fund manager do the heavy lifting. So there's no active buying and selling and monitoring of shares and all of the analysis that needs to be done. The fund manager is merely mimicking the S&P 500. So only when a company changes on the S&P 500 list, that's when the fund manager makes the swap. And this is the kind of thing that allows fees in index funds to be really low. One of the nice things about index funds in South Africa, it's very highly regulated. We have a lot of regulation with the FSCA, the Reserve Bank, and a whole bunch of licenses that the fund managers have to keep up with. So it's a very highly regulated environment. So you have that peace of mind knowing that there is regulation, that there's oversight over these asset managers that's investing your money. And one of the best parts of having a passive index fund is that if one company in that fund tanks, you have the other companies to pick you up. Because remember that if a company is in an index, they're performing well, they're a large cap company. So they might be down one day, but in the long term, they're going to be growing and expanding. So if in case one of those companies or even a handful of those companies do take a drop over a certain period of time, you have those other companies that are growing, that are competing with each other to just expand and grow. And you're going to share in that growth when you are investing in an index fund. Basically, all of that skill and time that you would do or perform by yourself to pick your funds, to pick your share, you now outsource that to an asset manager, and they do all of the heavy lifting. Again, asset managers as individuals, as companies, as individuals, portfolio managers, they have to be licensed, highly regulated environment once again. If you're getting value from this video, please hit the like button, hit the subscribe button, and also comment down below where you're listening from. And if index funds are interesting to you, and if you're going to start investing in index funds, and if you're already investing in index fund, let us know in the comments which ones you're investing in. So join us in our next video. I'm going to be sharing with you some index investing strategies that you can start using to get exposure to the offshore share market.